Hello guys and welcome back to our channel. My name is Desmond Samuel and this is yet another episode, first episode for the year 2024 of our weekly outlook. In case you're new to the channel, this is a segment of my YouTube channel where I dedicate to coming on here every week to give you guys a potential trading setups for the weeks ahead. Alright, without wasting any much time, so let's just kick things off. So the first pair on my list here is the euro dollar. The reason as to why this is the first pair on my list is because I'm actually short this guy as we speak. I am actually short euro dollar right now as we speak. I have trade entries on this pair. So following our top down analysis procedure, you could see that we do actually have a downtrend here on the euro where we've just been falling since 2021 and 2022, and then now we've been ranging for a while. You're putting in what seems to be a head and shoulders pattern. So seeing this bigger picture on the weekly time frame, we scale down to our daily time frame, and then we find potential trading opportunities in the direction where the market seems to be headed, which is down for the moment. Sorry, at the moment. All right. How did I get this entry here? It was quite simple. It was obviously I can see what the market is trying to give me a head and shoulders pattern, head and shoulders pattern, which is a trend continuation in this case to the downside. Or however, sorry, and then also a trend reversal in the case of this pullback here, which seem to have been in an uptrend. If you understand what I mean. So in this trading, we have intermediary levels and intermediary chart patterns. All right, um, where one chart pattern seems to be a reversal in the bigger picture, it could be a continuation because we have medium term trends and then we have the long term trends. So what we're seeing here is the beginning of a trend. So this is a high, this is a low, lower high, lower low. Alright, so I did see some flag pattern here on this pair. So I decided to hop on it at the validation. Um, it was just simple here. So we had actually approached this minor level there, and then nothing happened. So we started calling and flagging somewhere here. So we started calling and flagging somewhere. So this is the flag pattern, guys. This is when the market drops, flags for a bit, then breaks out, then continues to the downside. So a lot of people like to make entries at the break of the lower trend line, which is somewhere around here. However, I'm not really that kind of guy, so I waited for the structure to actually get broken, which is this high, and then this is the low here. So this was the pullback. So I have entries around inside of here, and then I'm actually still holding my trades here. You can see the market gave me some pips, came back to bridge that level to clear some more liquidity. And again, whenever this thing happens, the market tends to move in the opposite direction in an exponential manner. So that was exactly what happened at this point here on the daily time frame, where we had the market breach this level here, and then this also happened to be a fake out here. All right, giving us the head and shoulders pattern. And then when the market pulled back in, it dropped significantly. And then also the history is likely to repeat itself in the financial market. All right. So for me personally, I'm actually short this guy, and my front level target for this pair is 1.0748. Actually, let me show you guys where I went short on the euro dollar. So the euro dollar is actually one of my favorite pairs, to be honest. It's so easy to trade that. So you can see my entries here. So let me just make this bold enough for you to see. So this was how I made my entry here. So this trend line break and then retest, and then also the flag pattern, and then so I had three conferences here. All right, so I had the structure formation here, which is a downtrend, and then I had the trend line break, and then I had the break and retest. All right, so this was the flag pattern. Okay, trend line break. Let me just show you guys properly. So this was the flag pattern here. Okay, all right, good. So we had the structure break and retest, all right, which is this support turning resistance here, because also once again in the market we have intermediary levels where one level acts as support, and then in the future acts as resistance, same level. So this is it, same level acting as support here came to act as resistance here. All right, so I have one confluence, which is the flag pattern. I have the support break and retest, which is the second conference, and then I have the trend line break, and which is the third conference. All right, so that it alone is enough for me to be short this price. So I'm actually short this price as we speak. My entries are still open. I'm still holding, so I'm targeting. My first level target obviously is 1.07 460, all right. And then also you have to have it at the back of your mind that this week you have FOMC minutes coming out, so you may need to be careful with your entries. I think a day before the FOMC numbers, I would actually move my stop losses to break even, and then make sure that this is actually risk free, because at the end of the day, anything is possible. The market will actually reverse all the way to the upside, and then take me out for a stop loss. But I'm actually still short this guy as to speak. It is still a very valid trade for me. Okay, so the next pair on my list now will be the pound sterling. So now the pound sterling, it doesn't really have that much going on as we speak. But I like to point out something here, something very very crucial here, because I see a lot of people trying to buy this guy, and you need to understand where we are at the market. You need to understand where we are first at the market before you take any particular decisions. Okay, so what we have here on the pound sterling is something very very similar to the dollar index here. So you do have this collapse here, and you have this pullback here. So this is giving us some form of structure and a new trend formation, because we had like um let me just take you guys all the way to the beginning. So we had this low, this higher low, higher high. All right, so we came and then failed to put a higher low here. Instead we put a lower low. So sorry, a low. So this low is actually lower than this previous low here. So this is a bridge of structure, right? So a bridge of structure, and then this particular high that we're putting here has failed to become higher than this. So now we do have conflict of interest and a potential trend reversal here. So this is now the new trend formation, and this is starting with a high. This is a low. This is looking like a lower high. However, I'm still not sure this guy. As you can see, the market is laying on a support level. So one of the rules of engagement is that you do not short the market on any level. You have to wait for the market to react to that particular level before you do anything. However, I would like to spot something here for you guys to see clearly that we do have something cooking on the pound sterling. All right, so quick one here. Sorry, guys, so tired. So we do have this. Um, we do have something like this happening on the like a channel happening on the pound sterling. Let me just show you this guy. I wish I could enlarge my screen so you guys can see. So we do have this channel happening here on the pound sterling, and the 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 market seems to have broken as you can see here, out of that channel, and it's currently testing the outer point of the channel here. All right, so this is now looking like a trend line break and then retest, if you actually get my point, because this was the first touch here, second touch here. So this was now like the outer retest happening here. Okay, so let me just show you guys something else. So we do have a Fibonacci play happening here as well. So from swing high to swing low, they have the market laying and playing around the 0.5 and then 0.618 region, and then you do actually have the market now starting to form a kind of trend here. So you can see that initially we had this uptrend. This is the low, this is a high, higher low, higher high, higher low, higher high, equal to the war high. So this is now like it's turning this way. Clockwise, it's looking like it wants to drop. However, I have no business shorting this guy until I see a clear break below this particular um, structure level here. So if I do see a complacent break below this structure level and pull back here, then I'll be shorting this guy all the way down to 1.21634. My prime target, if you do clear out this bar here, if you do clear out this 1.25571 bar, we should actually see the pound sterling at 1.21634. However, in the event that we do not get to breach below, I will actually blow up all the way up to the upside. Same thing happens. All right, just follow the structure. It's easy. Just find your most recent high or recent low. So you wait for a break and retest. You buy to this point, or you wait for a break and retest, and then you buy to this point. Just follow the recent highs and recent lows. It's very, very easy, guys. Very, very easy. So I'm actually waiting for the pound sterling to see what it wants to do here. Okay, because it seems to have broken out, and then but then it's still like a 50-50, right? It could go out to the upside, it could collapse to the downside. It is still 50-50, guys. Nothing on the pound sterling as we speak. However, for me personally, due to what the euro dollar is doing, I'm actually not favoring these guys to the upside at all. In fact, once I show you guys the dollar index, you know exactly why I'm saying this thing. All right, so that's that for the pound sterling here, and then the next pair on my list would be the I don't think I have any business with NzdUsd, to be honest. NzdUsd isn't doing anything much. But why do I have to break that down? Okay, so NzdUsd seems to be giving us what looks like inverse head and shoulders pattern here. Okay, so we had it to collapse all the way here. This downtrend was very, very lovely. It came and then tapped into this one, and then gave us a pin bar there, then a reversal after this breakout to the upside. So this is now looking like a big and retest on NzdUsd. However, I'm not I'm not very, very confident in this setup because of what the rest of the XSS USD pairs are doing. So there's absolutely no way I'll be shorting the euro and then looking to buy NzdUsd. Alright, so it doesn't make any sense to me. However, once again, I just let the market decide. Okay, because I'm not in charge of this thing. I don't control the market, and that's one thing that you need to understand is that it's a game of probabilities. Anything is possible. So let's see how the market reacts to this level here. If you do have, because this is also if you don't actually play here, alright. So from swing low to swing high, you can see that the balance is well at this point here, and then this is an uptrend for me. So if we do have market balance out here and then give us maybe medium term bullish entries, then that's fine. However, for me personally, I would prefer this guy come and break below this minor level here, then we can continue shorting to the downside. So the next pair on my list here would be the EurJpy. So the EurJpy is starting to give us some clean structures, guys. Some clean structures here. Okay, so I can see what is looking like a flat pattern here after a nice bullish trend. I can see what's looking like a flat pattern here. So I'm actually very, very patient with this pair. Okay, so we had this bullish trend to the upside. So I'm bullish on all JPY pairs. All right, so we have this flat pattern forming here, and then we have this also forming at a key, Fibonacci level in an uptrend. So this is three conferences. However, for me, I would like to see the market come and break above this 161.500 region. Then once it does that and then retest, I want to see something like this. Right? I want to see something like this. Then go to the upside. Okay. However, my prime target for the EurJpy moving on is 1.6163.555. If you do breach that level, then we should see the EurJpy at 169.000. Okay, so now let's move on to gold here. So for gold itself, something similar. I'm actually bearish on a lot of these pairs for the moment, according to what I'm seeing, unfold in the financial market. So um, according to what I can see from the rest of the pairs and then also the dollar index, yeah, I'm actually favoring gold to the downside. Okay, because gold actually hit its all-time high. I think sometime back last year it did hit its all-time high. So as you can see here, so we reached that and then we fell failed to sustain above that, and then this seems to be like a break all the way back to the downside. So from the look of things, I'm actually favoring gold to the downside. However, I'm being very, very cautious with this because, like I said, this week we have FMG numbers coming up, so you have to also be careful yourself. So following the uptrend we saw here, we do have this trend line break, and then also similar thing happening on the pound sterling and the euro dollar. There seems to be a change in trend where we are starting to have like a high. We went from having a low to a high, so higher low, and then failed to put in a higher high or equal high. So this seems like a changing trend for me. So you can see that this is also the beginning of a new trend here on gold. So from here you can see that we have a high, a low, lower high, so lower low. So we need to go and put at least an equal low somewhere around here. Okay. So and then also watching this structure level here, you can see that it is forming a good wave here. So you have this high, this low, lower high. Okay, so we will do and then pull back. So I'm actually short this guy as we speak. My overall my first level target for go is 1976, and then the overall level target is the 1938 right here. So let's just see how the market plays out. So the next and the last pair of my list here is the dollar index, right? So now, the reason as to why I'm actually very, very confident in my setup is what the dollar index seems to be doing at the moment. So we do have a potential reversal in our books here. So okay, we have seen so the dollar index is just the inverse of the euro dollar. So you can see we have this inverse head and shoulder. So in the case of the euro dollar, we had head and shoulders pattern. Then for this case, we have inverse head and shoulder pattern here, and then we also have, so we say there's a bigger chart pattern, and then there's a smaller chart pattern. There's a bigger inverse head and shoulders, and then there's a smaller inverse head and shoulders happening here. So we did have a breakout of this neckline here, and then we are actually, so we did have a breakout of the neckline, and then we, we came in here for a retest, and then we're actually pointing to the upside. So every single thing I've shown so far would be validated if we do see the dollar index break above 104.263 this week following the FOMC numbers. However, in the event that doesn't happen, we can wait for a while and fall back. All right, so that is entirely up to the market. All right, that is the end of our weekly outlook, and if you found value and you need to this channel, make sure to hit the subscribe button, leave a like and comment on what you think. So I'll see you guys in the next episode.